Hiya, Sam from Teach the World to Trade here. Part of our Start Here video series on the YouTube channel that we've created. This video is going to be about what a professional trading process actually looks like. So we've spoken before about professional traders and those that succeed in trading. They're not necessarily smarter than you. There's a few things they do have. One of them is a structure. It's a structure that I've been teaching for many years, and I've curated over my many years as a trader, educator, coach, mentor, manager, trading office owner. So I want to bring this to you. And in this video, I'm going to show you that structure. Because once people understand why they've been struggling, and the next question is always the same: what does a professional trading process actually look like? What are the pros up to? So there's some clear misconceptions. Most people think process is a strategy. Many traders have come in, junior traders have come in, I've taken on, I've employed, have come in with big ideas of they've done maybe an FX course online, and they've had a little look at some indicators that they think that's the be all and end all. And I've kind of had to almost retrain them and suck it out of them so they can look at more holistically the process that I've taught them. Traders have not been able to let go of those indicators, and some of them, thinking of one in particular, he'd have a chart with about 50 indicators on, and it just looked like spaghetti on a plate. It was so messy, and there was no direction. And I said, you've got to let these go. You've got to kind of step back a few steps, open your mind a bit to the more the process that we use, and then move forward. And he didn't, and he failed. So those techniques and those indicators that you can just get married to around outside of the process can really hold you back. Don't get me wrong, you're going to need some sort of indicators and some way to identify a trade, which we'll get into in a second. But try not to get married to those indicators, and perhaps other courses and other people that I've seen on YouTube and online that kind of push is not what you want to do, really. You want to come back, step back, have a look at the holistic process, trading process as a whole, and then move through it step by step. So the professional trading process, like I said, I've been lucky enough to trade hundreds, thousands of traders academically, professionally over the past 20 plus years. And at one stage of my career, I wanted to upgrade our trader training for one of my trading offices. And because we were part of a wider group, there was up to 15 trading offices around the world in the group that I worked with. I had access to all of the traders in the group, and I looked at their results over the past 5 years, back-tested a lot of what they did, spoke to the traders, and then came up with this trading process. So there's a lot that's gone into the back end of me telling you about this trading process, right? And it all came down to the kind of 4 core pillars: identifying a trade, executing a trade, managing a trade, and evaluating a trade. Identify, execute, manage, evaluate. 4 pillars. I've been teaching it for many years now, and I still run through it every day myself. So each of these components is kind of multifaceted. There's a lot to consider and identify. There's a lot to consider and execute, a lot to consider and manage, a lot to consider and evaluate. But those 4 core pillars need to be run through for every trade. Essentially, if any one of these is weak or missing, the whole thing breaks down. And that's where I've seen, and those that I've worked with at a high level, heads of markets, heads of trading floors, heads of companies, trading companies. This is where we see it break down. If you start removing or being weak in any of those parts, it's when you start losing money and not succeeding, essentially. So stage 1, identify a trade. This is just high level, welcome to the trading process stuff. Obviously, I go into this in greater detail throughout my training courses and a bit more on YouTube and in my coaching. But yeah, step 1, identify a trade. It's where you slow down. It's the foundation. It's not entering a trade. You're doing your research. You're an analyst, essentially. Your market selection, choosing which market, looking at the conditions of the market, looking at directional bias, using technical analysis, using fundamental analysis, using seasonality, looking at price action, Really understanding that market, why it's moving. We're essentially, we break it down very simply. Where we know where the market is now, we know where it's been because we can look at technical analysis, look at charts, and our job is to find out where it's going. Right? Is it going to keep going on its direction, or is it going to turn around? So those are the key things about identifying a trade. Professionals, we don't scan the markets looking for excitement. As I talk about this, the metal space is going crazy, and everyone's going, buy gold, buy silver, buy copper. What's going on? Da 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 da. And it's like, well, no, that when the market's going like that, you don't want to trade because it's trading irrationally, and it makes it a lot harder. So you don't follow the big shiny balls. You take a step back, wait for things to calm down, and then run your process through it. So yeah, we look for situations. Essentially, we plan our days and weeks, and we know our markets, and we know what we're looking for. Essentially, because we run our process. So if you haven't identified your trade properly, everything that follows is guesswork. So if you've not run through your identify a trade, say your checklist and your protocol, then it's going to fall apart from there. It leads to overtrading, fear, random entries, impulsivity. I mean, that's the big killer for myself and many traders. So that's step one, identify a trade. Step two, execute a trade. So this is acting on your pre-identified idea. You've looked at identifying a trade, then you move it to the execute funnel, and then you run through your execution protocol. You're looking at your entry criteria, position side. It's where risk comes in. Where your stop is. You've got to know where you're getting out before you get in. Very famous hedge fund trader said that. And so you've got your stop, entry, and exit. And you've got your size, predefined risk. Execution is pretty boring, and it should be quite mechanical when identification has been done properly. So once you move forward, you're moving through that. Like I said, it's a process. A lot of this does become boring after a while. A lot of people get into trading for excitement and dopamine hits. But when you do it properly, you are just running through a process. But then you get the result that you want. And I think that's what people need to break through as junior traders or aspiring traders. You need to realize that you have to go through the motions and grind the gears to get the result that you want, which is where you want to be, not chase excitement on the way, which is where you have that impulsivity, over trading, under trading, fear sets in, and then you don't get the result you want, and then you're not a trader. Okay, so identify, execute. When we move on to manage a trade. Step 3, managing a trade. So management is kind of managing that trade when you've got the trade live. Once you've executed it, you've got to, we talk about that methodical approach to execution. But once you get to management, you can control everything up to executing your trade. And once the market's live and the trade is live, then you can't control the markets. No one can control the markets. So you have to then manage that situation, your situation. We talk about a ship analogy, and in a storm, you're on the waves and the market's, live. You've got the wind, you've got the rain, you've got the waves. You've got to navigate yourself through all of that to form a successful trade. And a successful trade doesn't mean you are necessarily win. Successful trade could be like the market shifts, sentiment shifts, and you've got to get out before your stop because that sentiment has shifted. I mean, that is good trade management, right? And professionals manage trades, and they don't argue with them. They don't argue with the market. They don't say, no, you're wrong, market. You're going the wrong way. You should be going up when I want you up. Or you'll get, someone said something and it's sending the markets haywire. You will lose. The market does what it wants, right? So professionals manage their trades and their situation with whatever the markets throw at them. That's what's important, and that's a lot of what I coach and teach. And a side note, I've said for years, many years, that I can teach anyone, like I say, to trade and identify, execute, manage. But because the execution and management is very much down to yourself, successful trader, that's the difference between a successful trader and a non-successful trader, is execution and management always, because this is the ultimate patience and discipline test, the 2 core traits that traders live and die by. And then the fourth, last but definitely not least, is evaluate a trade. It's where most people disappear, right? It's when a lot of traders that I've taught over the years, day one, I'm like, get a journal. I give them a journal. always give them a journal, A4 pad to write on. I said, from day one, you need to be taking notes. You need to be listening. You need to be taking notes. You need to be evaluating every day, even when you're not trading. And when it comes to trading, reviewing your decisions, not just your P&L. And two simple questions that I give you to ask yourself right now for your trading. How can I make more money? How can I lose less? Very simple coaching questions. There's a lot more that I do for myself and other traders, but I give you both of those free right now. How can you make more? How can you lose less? Every day. And write it down and journal that, because it's where improvement actually happens. And we talk about win or learn here at Teach the World to Trade. That comes out on your evaluation stage. Very, very important to do. It's where most people do nothing. You take the hit if you lose, or you take the dopamine hit if you win, and then you carry on, rather than taking those lessons to improve you. Not just trading, it's for everything in this world, right? I think a lot of people will agree that journaling is a positive source of growth. So this process solves most problems really in trading. Reducing fear, gives you those anchor points, prevents over trading, removes that ego, and creates consistency, all of which are pros for positive trading results. A good process doesn't guarantee profits, but it does guarantee survivability. It gives you that process to reflect on, to grow from, and then get you where you want to be as a trader. Okay, coming next, we're going to look at why risk is absolutely key in trading. I've spoken about risk a few times. It is, again, it is not just a pillar, but it's a universe on its own, because we have to take on risk. We're dealing with risk every day as traders and in the markets, and it's super important to grasp. And you have to have a relationship. We call it a relationship with risk and an understanding for risk. And once you can do that, you can achieve what you want to achieve. So looking back, we've got the process. Once you have that process, trading stops feeling chaotic, gives you those anchor points that we talk about, and it becomes something you can work on. So let's move on. Hopefully you've enjoyed these videos so far. That's the trading process. I teach a lot around the trading process, and it's kind of my own anchor point for teaching and trading myself. Okay, so hopefully you've got that structure. Work with it as best you can from a high level. If you want more, there's more coming up, and you can check us out on teachtheworldtotrade.com.